Good evening.
Good evening, sir.
Anyone here for the first time? Okay. Welcome to all of you. My name is Utkarsh. I will be your teacher for CFA, FRM, level 1, 2, 3, all the levels. Rest of my introduction is boring, so I will not waste your time with that. We're starting a new subject. Which one? Fixed income. Now, before I start the subject, one very important requirement. How many of you are comfortable with using the Texas calculator? In fact, let's do the other way around. How many of you are not comfortable using Texas calculators? Okay. So I'm going to operate on the assumption that you know how to use calculator. If you do not, then sit next to someone who does. So at least you would be able to pick something out of it. Second assumption, how many of you are not comfortable with the TVM calculations on Texas? TVM calculation किस किस को नहीं आता? I would be assuming you know TVM calculations. Again, discussed in level 0, right? So that's the basic premise. But if you're attentive, you would still be able to learn. Try sit next to someone who has a calculator and knows how to do it. So at least they can teach you. So by the time you leave, you've made good use of these 3 hours. You need my help in doing that? Can you raise your hands again? The ones who don't know how to use calculators, give me a hand, please. Okay. आपको नहीं आता? आपको नहीं आता? आपको sorted. आप तीनों को नहीं आता? आपको आता है? मुझे पॉइंट क्या है? आपको बता सकता हूँ। आप इधर चले जाओ। आपको दोनों को नहीं आता? आपको आता है? आप इधर आ जाओ। चलेगा ना? इसको थोड़ी देर लेके जाओ आपसे तो। ओके, थैंक यू। हाँ, इस साइड में कौन है? हाँ, इसको बीच में लोगे, ठीक है। आपको नहीं आता, आपको आता है? ओके। सो मैम आप इधर आ जाइए, ये आपको हेल्प करेगा और आप दोनों के बीच में जाइए। एनीवन एल्स? आप दोनों को नहीं आता है? सर आपको आता है? आप बीच में बैठ सकते हैं दोनों के? तुला येतं का? Anyone else? Anyone else who doesn't know how to use calculator? Okay. All right, let's start. So the word fixed. शुरू करें? Comfortable? AC is working fine. ठीक है ना? The word fixed income. What does it tell you? Fixed cash flow. Has anyone of you or in your family invested in fixed income? Has anyone in your family ever invested into a fixed income product? Yes? Okay. Which one? Fixed deposits. मतलब वो बैंक वाला FD. ये कह रहा है, he is saying bank FD is a fixed deposit or a fixed income product. Is that true? Yes. So which means all of us intuitively know what this thing is, right? I go to a bank, I deposit 100 rupees. Every year bank will give me 5 or 6. At the end of the maturity, it will give me my 100 back, right? That's what fixed income is. Now, does fixed income include anything else? Bonds. Now, believe it or not, this is the oldest business that humans have done, or one of the oldest business, and also one of the most profitable one, right? Business of lending, business of borrowing, right? That's what it comes to. So when we are into fixed income, we're generally dealing with bonds. I'll start sharing my screen here. I'm starting with the subject right away. So we're talking about bonds. And if you want to deal with bonds, then you need to get acquainted with some terms. The first term that you're acquainted with is something called as a face value. What does it mean? What is a face value? It's like some sort of a denomination, right? Like how we have a 100 rupee note. So that's the face value. In the same way, we might have a 100 rupee bond, or we might have a 1,000 rupee bond. We might have a 10,000 rupee bond. So think of this as some sort of a legal denomination which is attached to a bond. How about every bond will have something called as a coupon rate or a coupon rate? What does this mean? This means interest, the interest that I earn. Now, anyone knows, and maybe it's in my videos, I'm not sure, but anyone knows where the word coupon comes from? Why not just call it interest rate? Why call it coupon rate? Correct. See, now these days, imagine I want to borrow. Okay, I'm a borrower. So I come to you guys and I tell you that listen, I want to raise money, I want to borrow from you. I'm selling bonds, will you buy? You say, okay, fine. Then these guys agree to buy. So I have a software in which I will record their name. So when I have to pay coupon or when I have to pay interest, I know their bank account details, I can directly transfer. But back in the day, this system was not available. Everything was physical, right? So therefore, the system was different, and you'd be very intrigued to see this. Look at this image. And this will give you some idea of where the word coupon is coming from. Just copy this image. So what you see here is a bond certificate. Looks like some sort of a gold bond issued in which year? 1927 to 1942. Of course, the image is not very clear. To me, this looks like a four point something, right? Something like a 4%. So if you invest 100, this is the face value of the bond. You invest 100, every year you get how much? 100 into 4. But वो 4 में किसको दूं? Because there was no technological system to do all that record keeping. So whenever we raised the bonds, we used to give, or these issuers used to print these coupons along with it. All that you had to do is you had to go to the company on the date on which coupon is to be paid. वो उसमें से coupon फाड़ो, right? Take out the coupon, give it to the company. They will give you the amount, and that is where the word coupon comes from. Okay, so we have a coupon rate. Now, how do you convert this coupon rate to a coupon amount? It will always be face value into the appropriate coupon rate. Is it okay? Then there would also be a very useful concept, and towards the end of the session I'll be spending some time on this, called YTM, which stands for yield to maturity. All of this is discussed in level 0, by the way. Now, how do you think of yield to maturity? What is the meaning of yield to maturity? No, but so you're saying I don't earn, for example, just is it possible that I can have a bond with a 5% coupon rate and a 4% YTM? Is that possible? So then what's the difference between the two? Coupon rate is fixed and YTM changes. YTM keeps on fluctuating, right? And how to make use of that YTM we'll learn very soon. And then finally, every bond will also have a market value. Okay, now this bond had a face value of 100. Does it mean if someone is buying this bond in the market, वो 100 रुपए में चलेगा? No? Can it be 105? Yes. Can it be 105? Yes. 110? Yes. 120? Yes. Can it be 90? Yes. Are you saying the bond can also trade so ke niche below 100? Yes. Yes. So then today's session is about this. Today's session is we're trying to figure out how do you get market value of a bond. And that brings us to our first sentence. This is the only sentence I'm going to ask you to write in today's session. Okay, everything else, of course, I'll be sharing notes. But how do you get market value of the bond? So, market value of a bond is present value of future cash flows that I'm expecting to receive, discounted at, I hope you know what discounted means. Discounted means उसको प्रेजेंट वैल्यू लेना है ना, डिस्काउंटेड एट करंट YTM. So focus on the word current. Market value of a bond is present value of future cash flows discounted at current YTM. It might sound fancy, but couple of practice questions, you would be okay with this. Okay, have you written the sentence? All right, so here's your example number 1. Let's assume we'll take some real example. Let's look at some of the bonds issued in India. Let's look at this one. Okay, now I've chosen this because I think if you're in India, everyone knows HDFC Bank. Do you? Okay. Now, I'm going to make some modification to this. So what I'm going to do is I'm going to convert this yield. Yield is nothing but your YTM. Now we are going to change the YTM. So what are the details of this bond? The face value of this bond will say is 100. Okay. The coupon rate is 7.25% per annum. The current YTM, let's make up a random number. We'll start with maybe 10%. And what is the maturity of the bond? So how many years? So we'll assume 5 years. Okay, it's almost the same sequence. So let's say maturity of 5 years. Now, if the YTM is 10%, what should be the value of the bond? Okay, that's what we want to do. Now we're going to do the valuation with 2-3 different techniques in this example. First example I'm going to solve. आपको सिर्फ ध्यान से देखना है. Just understand how it is done. Then subsequent examples you start solving along with me. First method to do it is without the calculator, just by building a formula. Okay. So first we'll visualize this on a timeline. Time 0, 1, 2, 3, 4, 5. Time 0 मतलब आज. ठीक है ना? देख रहे हो ना आप सब? Time 0 means today. Now today I have to pay some amount and buy the bond. How much amount do I have to pay? I don't know. वही तो ढूंढना है. कितना पैसा देना पड़ेगा वो ढूंढना है. So इसको ignore करो. Because I changed the YTM, so I have to change the price also. Right? So just ignore this. How much should I pay to buy the bond? पता नहीं है. But what is the face value of the bond? 100. Can the market value be different than 100? Yes. But if I buy the bond, then HDFC Bank in the first year will give me how much? It will give me 100 into 7.25%. So how much will it give me? 7.25. This is called the coupon amount. Second year, 7.25. Third year, same. Fourth year, same. Fifth year, same. Kya plus? Which year? On the fifth year. This is called redemption of the bond or maturity of the bond. And in the fifth year, the bank will give me my face value back. Even if I bought the bond for a different price, मतलब मैंने 90 में मैं खरीदा होगा, तो भी बैंक कितना देगा? 100. On redemption or on maturity, I will always receive the face value. Now, what do you mean by, so these are my cash flows. Now look at the sentence. Market value for bond is present value of future cash flows. We know what future cash flows are. Discounted at, discounting means usko पीछे लेके आना, at current YTM. What is the current YTM? 10%. So my job is that this number I need to discount and bring it to year 1. This number इसको पीछे लेके आना है. I have to bring it to year 0. Third, bring it to year 0. Fourth, bring it to year 0. Fifth, bring it to year 0. So then I will have A, B, C, D, E. The total of these items will be the value of the bond. That's it. It's that simple. What do you think? Makes sense? So how do I do it? If I have to not use a formula and just, or if I have to use a formula but not the TVM row, this 7.25, when I have to discount, I have to divide. Divide with what? 1 plus interest rate. So 1 plus what interest rate or what YTM? 10%. For how many years? Raised to 1. Raised to 1, not 5. ये पहले साल का कैश फ्लो है ना, so raised to 1. Second one, 7.25 divided by 1 plus 10% raised to 2. Third one, 7.25 divided by 1 plus 10% raised to 3. 3 साल हो गया ना. Then the fourth one, 7.25 divided by 1 plus 10% raised to 4. आखिरी वाले में क्या करूं? 107.25 divided by 1 plus 10% raised to 5. That's my equation. When I solve them individually, add them up, that should give me the value of the bond. Is that okay? Now how to do it quickly? चलो साथ में करो. 7.25. अच्छा, by the way, 1 plus 10% कितना होता है? 1.01. 1.1 है ना? So 7.25 divided by 1.1 on the calculator. Now those of you who don't know how to use it, now this is the time you want to look at someone's calculator. 7.25 divided by 1.1 equal to, how much is that? 6.59. STO 1. When you do STO 1, it stores that number on your Texas calculator. Is that okay? Then 7.25 divided by 1.1 divided by 1.1 one more time. दो बार ना, क्योंकि इस बार raised to 2 है. This time we have raised to 2. So we're going to divide with 1.1 and 1.1 twice. What number do you have? 5.99. STO 2. Okay. Now, was there a faster way to do it? Yes. How? No. Do RCL 1. RCL 1 was what number? 6.59. If I were to just divide that 6.59 with 1.1 again, दो बार हो गया ना? Try it. RCL 1 divided by 1.1. 5.99. STO 2. So now divided by 1.1 one more time. STO 3. Divided by 1.1 one more time. 4.95. STO 4. And the last one will solve 107.25. Now divide with 1.1 5 times. Divided by 1.1 divided by 1.1 divided by 1.1 5 times. And then store that in the 5th memory slot. Okay. Now you have to add up the 5 numbers. What is the last number, by the way? 66.59. Okay. So now add up all the 5 numbers. How do you do them? RCL 1 plus RCL 2 plus RCL 3 plus RCL 4 plus RCL 5 equal to 89.57. So there you go. This is your first official bond valuation exercise. See gap. And I promise you this. The whole of fixed income is nothing but time value of money. Everything in fixed income is TVM. If you're good at TVM, you would realize that you would find fixed income extremely easy. Okay, but you need to be really good at time value of money. If you're not, you need to go to level 0 course, spend some time on the TVM module. Is everyone okay with this? Okay. Second method. Now on the second method, we will use the TVM row. Now, this is going to be the most preferred method. We will be using this method all the time. Now on your Texas calculator, okay, now observe carefully. 1, 2, 3, 4 and 5. When you have these recurring payments, recurring मतलब बार बार आने वाला. Okay, so we have 5 payments of 7.25. Now can I say, do you think I can say that this is a constant payment? बोल सकते हैं क्या? Can I also say that it has a constant frequency? Frequency मतलब साल में एक ही बार आता है, ऐसे बीच बीच में नहीं आ रहा है, right? It's coming once in a year. Is that correct? So when you have a constant payment and constant frequency, the button that you use on the TVM row is called the PMT button. Okay. Plus, I'm getting a one-time payment in the 5th year. है ना, 5वें साल में 100 भी मिल रहा है ना अलग से. I'm getting a one-time payment in the 5th year. So this on the TVM row is referred to as the future value. So observe the TVM row carefully. You have a payment button, you have a future value button. How would you solve this? So do this with me. Second, clear TVM. Okay. Now, why are we doing clear TVM? To delete kuch agar if there was anything that was unsaved or saved from previous one, we're deleting it. Now press 7.25 on the calculator, press the payment button. Now this 7.25 kitne baar repeat ho raha hai? How many times is repeating? 5. So press 5 and press the N button. Is everyone okay there? Then press 100. Okay. And what should I press now? The future value button. Then of course you want to discount them at what rate? 10%. So press 10 and then press the IY button and then say compute present value and you're done. What are you getting? 89.57. Is this making sense? Easy? In one go, all the steps done. Comfortable? Third method of doing it. Now we will use the cash flow function. Now again, visualize what's happening. 0, 1, 2, 3, 4 and 5. 7.25, 7.25, 7.25 and 100. Now on the TVM row, or sorry, on the Texas calculator, press the cash flow button. Then press second and clear work. Clear work is where the first column, last button. Now what do you have on the screen? You have CF0. CF0 means time 0 में क्या cash flow मिला है आपको? So now look at this and tell me what cash flow do we have at time 0? Nothing, right? So this is gone. Now press downward arrow, come to CF1. Downward arrow, come to CF1. What do you have now? 7.25 in year 1 and then make sure you press the enter button. It's very important you do that. When you press enter button, you would notice that an equal to sign will come. Equal to sign means the calculator has accepted the value. Now this 7.25 is repeating how many times? Technically 5 times, but in the 5th year, I have one more cash flow, no? On the TVM row, I don't have to worry about that additional cash flow because there is a future value button. But in the cash flow, I have to. So therefore, this time, when I press downward arrow from here, it will ask me something called as a frequency of 1, which means ये 7.25 कितने बार repeat होता है? 7.25 is repeated how many times? It's repeated how many times? It's repeated 4 times. So press 4 and press the enter button. So your calculator has automatically understood that 7.25 was repeated 4 times. Then press downward arrow and come on to cash flow 2. But technically your cash flow 2 is which cash flow now? It's the 5th cash flow. So should I enter 100 or should I enter something else? That's correct. Now I haven't considered 7.25 separately, no? So I have to add that here, the last one, 107.25. Then again enter and we are done. Is everyone with me on this? Now after this, which button? NPV. So press the NPV button. Then it will ask you, hey, what's your I? So I is your interest rate. So say 10, enter. 10, enter. Press downward arrow. It will show you NPV. Press compute. What are you getting? 89.57. What do you think? Can you handle this? Next one. Actually मैंने तीन ही सोच रहे थे, और मेरे को चौथा याद आ गया. So we'll do a fourth one also, just for fun. Let's do one more time. This time we'll use the formula, but we'll do it a little differently. Remember the formula equation? बोलो क्या था? 7.25 divided by 1 plus 10% raised to 1. Yes? Plus 7.25 divided by 1 plus 10% raised to 2. In this fashion, we had it 107.25 divided by 1 plus 10% raised to 5. Is that correct? Now I'm writing it a little differently. Please observe. 7.25 into 1 divided by 1 plus 10% raised to 1. Do you think this works? Yes. Plus 7.25 into 1 divided by 1 plus 10% raised to 2. Plus 7.25 divided by 10% raised to 3 into raised to 3 raised to 4. Last cash flow, what should I write? 107.25 into 1 divided by 10% raised to 5. Is it okay? Now, this number, okay, in the world of finance, which is 1 divided by interest rate raised to n, this number, we call these numbers as discount factor. Okay, so this would be called as discount factor 1, discount factor 2, discount factor 3, discount factor 4, discount factor 5. अब इस बार क्या करेंगे? We will calculate each of the discount factors separately. Okay, so let's do it together. You do this with me. What you do this time is just do 1 divided by 1.1. 1 divided by 1.1. 0.9090. Okay, plus 1 divided by 1.1 divided by 1.1, because it's raised to 2 now. You know? So 1 divided by 1.1 again divided by 1.1. So that's my second discount factor. How much is that? 0.8264. अब ये सेकंड वाला डिस्काउंट फैक्टर कहां से आया? प्रीवियस डिस्काउंट फैक्टर बोलो, divided by 1.1. See if that works. 0.9090 divided by 1.1. 0.8264. आसान है ना? So in this fashion now we'll start doing rest of them. So 7.25 into 0.8264 divided by 1.1. 7513 plus 7.25 0.7513 divided by 1.1. 6. Okay, and finally 107.25 into 0.6830 divided by 1.1. 0.6209. Now please solve this equation. Each one of you, please do it on the calculator. What we try to do here in the classroom is, because I repeat the same examples again and again, we try to build a muscle memory. इसको इतना practice करेंगे that your fingers should be able to solve it. Solve, store it in memory slot, solve, store it in memory slots. How much is this? No, just give me a total directly. 89.57. Was that the same answer we got last time? Yes. That's method number 4. So summary. We're learning bond valuation. We first started with a sentence. Help me out with it. Market value of a bond is present value of future cash flows discounted at current YTM. Okay, now we're thinking at the moment current YTM is some sort of a market interest rate. Now, we've learned 4 methods so far, and all of them are different variations of time value of money. What was the method number 1? We just plotted that equation or formula, right? Cash flows discounting backwards. Method number 2, we did this on TVM row. The third method, we did this on cash flow function. The fourth method, we did this on using discount factors. You should be able to do any of these. एग्जाम में कौन सा वाला आएगा? कोई भी नहीं, ये नहीं आएगा. This is very basic. They will not test you this on the exam. We're just building the background so we are more comfortable with advanced questions after this. Which one do you want me to repeat again? 1, 2, 3, 4. Do you think you can handle all the 4? Okay, then let's do 1. Okay, someone on the chat box is asking the second method. Sure. Of course, if you're asking the second method, then in high probability, you haven't spent time on the level 0 course, Manideep and Ritanshu, but nevertheless, I'll still quickly repeat this for you. But once you spend some time, I promise you would feel super comfortable with this. First, locate the TVM row on the calculator. Second row, third row, second row, no? Third row. Third row. Third row on the calculator is the TVM row. You have to press the second button, which is like a yellowish button, and then you have to press the clear TVM. Once you've done that, then these are the buttons you have to press in the same sequence. 7.25 PMT, 5N, 100 future value, 10 IY, compute future value. Okay, Atharva is asking a good question. Fair question. Where is this coming from? ऐसे ही ज्ञान, मतलब जस्ट बिकॉज एक वर्ड आता है तो ज्ञान बांटना है. कौन था ज्योमेट्री क्वीन वाला? ये तो मैंने कभी बोला ही नहीं है. मैंने क्या बोला मेरे को पता है भाई. हाँ, क्या है ये? He is asking where is this formula coming from. Okay, it's very simple. I'll tell you what. And all of you understand this intuitively. Okay, let's say it's like this. If I tell you that, okay, you have deposited 100 rupees into a bank, and bank told you that will give you 10% per annum. Okay, so at the end of the year, जब बैंक में पैसा लेने जाओगे, at the end of the year when you go to a bank to collect your money, how much will you ask for? 110, right? So what really happened here? You said 100, okay, into 1 plus 10% raised to 1 is equal to 110. This 100 is present value. This 100 is future value. Now, in this example, Atharva, we're doing opposite. We have the amount of money we are getting in the future. We have to figure out the present value. So then, is it okay if I write equation like this? Do you think it's the same thing? Yes. So which means present value is nothing but future value divided by 1 plus interest rate raised to n. That's it. That's where the equation comes from. Now you would say, okay, fine, raised to 1 I understood, but how about raised to 2? So the logic is simple. You deposit 100 in a bank. After a year, your money becomes 110. But bank ने बोला 2 साल का FD, 1 साल बाद और आओ. Wait for 1 more year, then you come. You say, okay, fine, but then this year, will bank, assuming bank has not paid you interest in the first year. Now, second year, will you ask them to pay you interest on 100 rupees or 110 rupees? 110, right? So then you would say, please give me 10% on 110. Do it on your calculator. 10% on 110. 110 में 10% ऐड करो. कितना होता है? 11 रुपया. 11 rupees, right? So 110 plus 11, how much is that? 121. What is that equation? That equation is nothing but 100 into 1 plus 10% raised to 1. This number is 110. Into, on this amount, please give me 10% one more time. So this will give you 121. Okay, so which is nothing but 100 into 1 plus 10% for 2 years, which is how much? 121. Do you agree? And if that's the case, then do you think it's okay for me to write formula as future value 121 divided by 1 plus 10% raised to 2 is equal to present value? That's it. So for 2 years, we do raised to 2. For 3 years, we'll do raised to 3. 4 years raised to 4, and so on. This is called compounding. What do you think? Easy? Do you think you can handle this? All right, so you do one now. If you want, you can take screenshots or pictures of these methods because I want you to repeat exactly the 4 methods as it is. Method 1 was with this formula or equation. Method 2 was on the TVM row. Method 3 was using the cash flow function. And method 4 using the discount factors. कर सकते हैं ना? चलो करो. All right, this should be fun. Face value of a bond 100. Coupon rate 10 percentage. Coupon rate 10 percentage. YTM. YTM full form? Yield to maturity. Meaning the market interest rate. Does it always have to be same as coupon? No. But can it be same as coupon? Yes, it can be, but doesn't have to be. Okay. Now, and I'll tell you the logic of that very soon. We'll go there once you're comfortable with the math. Let's make this 15. And let's keep the maturity of the bond as 4 years. Use all the 4 methods and find out bond valuation for me. Which 4 methods? Number 1, use the equation or formula. Okay, there's a reason why. I mean, we can do it on TVM row in fraction of a second. Look at the guys on the chat box. And I'm sure half of you already know what the answer is, right? But there's a reason why I'm pushing you to do the subsequent methods, because when we go to advanced fixed income, they'll come in very handy. So use the equation, use the TVM row, use the cash flow function, and use the discount factor setup or discount factor method. Come on, all the 4, each one of you. Put in the work, get your hands dirty. You need help, I'm here. Just raise your hand if you're stuck somewhere, anything you're struggling with.
First method 10 divided by 1.15.
1 plus
1 plus
15%,
1 plus
15% raised to 1. 1 plus 15% ब्रॅकेट च्या आतमध्ये. न्यूमरेटरला कूपन अमाउंट. हाँ म्हणजे 10 रुपये. रिस्पॉन्सिबिलिटी है, उनको आना चाहिए. और इसको भी. अगर इन दोनों को नहीं आया तो आज आपको जैमिंग में खड़ा करूँगा. What does that smile mean? Yes or no? करो, सिखाओ उन दोनों को. आप तीनों को किसी को नहीं आता ना? आपको आता है ना? आपको तो नहीं आ रहा है. आ रहा है क्या? लेवल 0 किया है आपने? इन दोनों को सिखाना आपका काम है. यहाँ पे कौन बैठा? कम. अरे कुछ नहीं करूँगा बाबा, क्यों इतना डर रहे हो? साइड में उसको अंदर बिठाओ. इसको सिखाने का रिस्पॉन्सिबिलिटी आपका है. इसको नहीं है, आपको खड़ा करो. So now I have Ayan. See, we don't need. Why is it given in percentage then? All right, let's start. I'm going to solve all the methods. It's actually the same thing, just different ways of doing it. Okay, so what would be equation? I want one of you to help me. आप करो, आपका नाम हर्ष. Okay, Harsh, help me. What's the first coupon amount? In fact, let's do a timeline first, no? So all of us can visualize this better. 0, 1, 2, 3, 4. Coupon 10% or $10. Coupon amount. How do you see? This is a coupon rate in percentage. So a coupon amount is equal to face value into coupon rate. That's how you do it, right? So 100 into 10% is equal to $10 or 10 rupees. So this is $10. Let's do it in dollars this time. Second one, $10. Third one, $10. Fourth one, $10. Plus we will have $110. Sorry, my mistake. It should be $100. These are my cash flows. Easy. Now, if I have to write an equation, it would be 10 divided by 1 plus 15%. Now this time I'm doing a shortcut. 1 plus 15% is how much? 1.15. Do it on the calculator, see if that's true. 1 plus 15% equal to 1 plus 15% equal to how much? 1.15. So 1.15 raised to 1, 1.152, 1.153, 1.154. All that we do is add up the four numbers. How much is this? 85 point? Okay. How many of you got this thing right? Give me a... Okay. How many of you feel आएगा बट थोड़ा और practice चाहिए? I mean, not 100% there. Come on, give me a hand raise. So करो ना, भी करो practice. Please take help of people sitting around you. Make sure you learn. It's easy. It's just A plus B plus C plus D type of thing. All right, next one. If I have to do it on TVM row, 10 should be what? Payment. In fact, before that, I forgot something, no? What? Second, clear TVM. Why do we do this? कुछ पहले, if there was anything saved, we want to delete that, right? 10 payment. आगे 4N 15. Okay, पहले ये रख लेता है. By the way, the sequence doesn't matter. You can enter in whatever sequence you want. Okay, so 100 future value, 15 IY, compute, and then press the present value button. That's it. Easiest, fastest way. How much? Second method. Third method. Press the cash flow button, then press second clear work. Cash flow button, second clear work. Then cash flow 0, nothing. We'll let it remain 0, right? So downward arrow. Cash flow 1, 10. Make sure you're pressing the enter button. Then downward arrow. Then frequency 1. 10 is repeating how many times? 4 times, no? 10 to 4 बार repeat. 10 is repeating 4 times, isn't it? So then should I enter 4? Why is that? Because fourth I have one more amount, no? 100. But then why did I not take frequency as 4 when I did the TVM row? TVM row I did frequency of 4. Why should I do 3 here? Because in the TVM row I have a separate button for future value. So that future value I can keep 100 separate. So 10, 10, 10, 10, 100. I can't do that here. So here frequency 3. Enter. Cash flow 2. 110. So see that 4th, 10th is captured here. Enter. Now press the NPV button. I 15. Enter. Downward arrow, it will show you NPV. Press compute. It will give you 85.72. How many of you got the first 3 right? Okay, fantastic. That's about 90% here. And now we'll do the final leg of it, which is the discount factor method. 10 into 1 plus 15% raised to 1 plus 10 into 1 plus into 1 divided by 1 plus 15% raised to 2, 10 into this thing raised to 3, 10 into 1 divided by 1 plus 15% 110 into raised to 4. Now can you help me with the discount factors? 10 into सिर्फ आप बोलना 0.95 plus 10 into 75, okay, plus 10 into and 110 into 5717, and when you add, what do you get? 80 85.7. Okay, is your answer. What do you think? Do you think you can handle bond valuations? Asana? Now after this, I'll not be repeating all the 4 methods. After this, we'll be using only one method, which is the TVM row. This is your standard method, but you should be able to do all the 4 if required. All right, yes, online. Yeah, thank you very much. I pass or I struggle. Tanay, not now, keep it on hold. I want to do it in a particular sequence. So we'll discuss YTM when the time reaches. I'll answer all your questions. If you have any specific question with respect to these calculations, this would be a great time to ask. Okay. Now, just on the TVM row. One more question on the TVM row. Someone is asking difference between equation and there's no difference, Meher. It's the same thing. We just broke down the calculation in 2 parts, but it's honestly just the same thing. Then you're asking me, okay, if it's the same thing, why are we doing it separately? Okay, and the reason why we're doing it separately is because what he's trying to ask is, why did we do the 4th method? Isn't that not the first method, right? Yes, that's true. But as we progress in the course, there will be some situations where you would be given these discount factors, and then they'll give you a bond. And then using the discount factors, you'll have to value the bond. So what point I'm trying to drive here is, if I have a discount factor for the 3rd year, I multiply that with the 3rd year cash flow, it directly gives me a present value. So for example, I want to take present value of this 10, and if the question provides me this number, I want you to know where this number came from. This number came from this equation, 1 divided by 1 plus 15% raised to 3. So all that I need to do is just multiply this with this, and my job is done. Right? So you should be able to value the bond across the methods. Okay. Can you show the 4th method calculation I'm getting wrong? Ridanshu, I'll show you the 4th one directly. Okay, you can do this with me. 1, sab log karo. All of you do this with me, but this time we'll do a shortcut. 1 divided by 1.15. Now just wait here, don't press equal to. 1 divided by 1.15. Okay, now on your screen you will have 1.15. Okay, now listen to me. We want this denominator to be raised to 4, right? Now see your calculator, you would see a x square button. Do you see x square? If you press that button twice, automatically it does raise to 4. So press that twice and then say equal to. What do you have? 0.5717. That's it. Easy? Alright. Next question, just on the TVM row now. Face value 1000 this time. Coupon rate 12%. YTM 15%. Maturity 7 years. Just do the TVM row. and get me the answer. Second, clear TVM, 1000 future value. Help me out. What should be the payment? 120. How do you get 120? 1000 into 12 percentage. So 120 is the payment, and 7 is the N, and 15 is the IY. Compute present value should give you kitna tha? 875.18. Easy? Okay, all right. Face value 1000. Face value 1000. Coupon rate 14%. 14%. Maturity 10 years. 10 years. YTM 10%. YTM 14%. YTM 20%. Calculate value of the bond in each of the three scenarios. Okay. So second clear TVM, 1000 future value. What should be the coupon amount? 140 is the payment. N should be 10, and IY 10. So 10 is N, 10 is IY. Compute present value. How much is this? 1245.7. Okay. Same drill here. Now you don't need to do everything else again. Just override, because notice this is same, right? Just the YTM is changing. So just make 14 is IY. Compute present value 1000. Now overwrite. Overwrite means just press 20, press the IY button, compute the present value. How much is this? 748 point something. How many of you got this right? Good. Now, calculation I think you are okay with now. Notice something. In one case, the market value of the bond is more than 1000. In one case, the market value of the bond is less than 1000. Can you observe the number and see if you can figure out in what situation we are less than 1000, in what situation we are more than 1000? When YTM is lesser, then what? YTM is less than the coupon rate, then the bond is trading at a price of more than 1000. These type of bonds are referred to as a premium bond, or a bond trading at a premium. When it's trading at a price which is more than the face value. 1000 ke upar hai na? It's above the 1000, so we call it as premium. These bonds here, okay, these are called bonds trading at the par value. Par value, Shreet, is 1000. And these bonds here are bonds which are trading at a discount. So premium bond, par bonds, and discount bonds. Okay. Now how to build thought process on this? So here's how you learn to think. Now this part is tricky. I want you to observe this carefully. What is YTM? Okay. This is nothing but your market rate. What is the rate that's currently in the market for FD or for bonds? Imagine you go to bond market. Just visualize that there is a market where you can go and buy bonds. And you know that these days the rate is 10%. Dhyan se suno. These days the rate is 10%. Some company comes and they says, you know what, we'll give you a coupon of 14. Now why will they give you? We'll worry about that later. But if they come and say that, hey, we'll give you a coupon of 14, is that a good news for you or bad news? Good news, no? 10% का rate चल रहा है, आपको 14 दे रहे हैं. 10% is the rate they're giving you. 14, fantastic news. Then you would say, you know what, I have to have this bond. It's okay if I pay a little bit more. So you're paying 1245 on this bond, whereas the face value is only 1000. But you go to bond market, you know the rate currently is 14. Okay. You ask the company, hey, how much will you give me? And they say, you know what, we'll give you the same. We'll just give you 14. You'd say, okay, fair enough. That's the current market rate. I'll pay you 1,000. Bond issued at par. Here, the current market rate is 20. The company is giving you 14. So now, are they giving you more or less? You're getting less. You'd say, you know what, I'm not going to pay you 1,000 for this because you're giving me less. So 748. So conceptually, what will help you do this easier is coupon is what you get in cash. Okay, I'm not using the word what you earn. What you earn is a different story. We're seeking it. But coupon is what you get in cash. So the simple thumb rule that you apply, and if I make a mistake while saying this, you correct me. If I'm getting higher coupon, ज़्यादा मिल रहा है cash में, it's a discount bond. No. If the coupon is higher, then it's a discount bond. It's a premium bond. If coupon that I'm getting is lower than the YTM, discount bond. If coupon is same, then it's a premium. So just think on coupon side. Coupon, YTM, coupon confuse ho jaoge, right? So easier, just think on the coupon. Am I getting more? Am I getting less? If I'm getting more, premium. If I'm getting less, discount. If I'm getting the same, it's a bond issued at par. Is everyone clear with this? Okay. Now, if I get more in cash in coupon, it's a premium. If coupon is less than the YTM, then it's a discount bond. All right. Again, videos will help Deepak later on. Now the question that comes is, why coupon rate and YTM are at times different? Why aren't they not the same? And why coupon rate and why YTM are different? So we'll have to do a little bit of thinking first on what YTM really means. Okay. So be with me on this. Now, slowly, we're going from maths to the concept side of fixed income. What is this? No. Bank. It's a bank. Who is this? No. Not a manager. Not an investor. Huh? Lender, bank को lender कौन होगा? Bank lender means FD. You advisor, no. Borrow. Who said borrower? Yes, correct. You're right. This is borrower. So let's call it borrower 1 and let's call it borrower 2. Okay. Let's say each one of them needs a loan of $1 million. Each one of them needs $1 million. Now, let's say borrower 1 happens to be an ultra wealthy individual. Let's say, okay, we'll go with that. I hope all of you know who this gentleman is. Okay. So this is your borrower 1. Now, his personal net worth would be a few $1 billion, right? So he's taking a small amount of loan. 1 million, by the way, is nothing but in India, we call it 10 lakh rupees. Now, this is 10 lakh dollars. Okay. Now, bank will say, you know what, sir, this is a joke. You want to borrow, of course. We'll charge you a very low rate. We'll just charge you what otherwise, if government had borrowed from us, we'll charge them the same rate or maybe a little bit more, right? So let's say to the borrower 1, bank offers 5% interest rate. Now let's look at borrower 2. This is your borrower 2. I think let's take this one. That's a very true representation of this guy. I think ye theek hai. Now those of you who do not know, so this is your borrower 2. Okay. Now, again, someday, if you get time in the class, I'll tell you a story. I mean, of course, I make fun of it once in a while, but there's a difference between a willful defaulter versus an entrepreneur who made a mistake. And what we want to learn as entrepreneurs, like in this country, we want to encourage risk capital, which means if someone is trying to do a big business, they take a loan and the business doesn't work. In the US, these guys would still be celebrated. In India, we have this culture, right? Like how we laughed at this guy. And we laughed because of some other reason. But if there's an entrepreneur who's taking a loan and business doesn't work, some of these guys should be celebrated, not laughed at. But we'll talk about that some other day. So let's assume risky borrower. Do you think bank will offer loan at 5? No. Then how much? Bank will offer at a higher rate, right? So you would say 5% plus boss, you're extremely risky. So we'll charge you, I don't know how much. Okay, let's say 4% more. So we'll charge you 9%. Now this concept you understand intuitively, right? Now this is nothing but if bank is taking a higher risk by lending money to borrower 2, so then we will say that this is a compensation for the credit risk. Do you agree? Okay, so that's a very broad concept. Now this rate that the bank will charge, think of them as some sort of a YTM. Okay, think of them as the YTM. So now how you learn to think of YTM? So YTM is nothing but very loosely it's made of multiple parts, but one important part of YTM is RFR. RFR stands for risk-free rate of return. That if the government were to borrow, what rate will I charge? And then on top of that, I will charge people something on top of it, which will be called as a spread. Okay, now the most important spread is, there are other spreads as well, but right now we'll just focus on one, which is credit spread. Credit spread is a function of what? Credit spread is a function of the riskiness of the borrower. Riskier the borrower, higher will be the credit spread. Safer is the borrower, like for example, Warren Buffett, what was the spread? 0. We just said 5 plus 0. But for the second borrower, we said 5 plus 4. With me on this? Okay. So now, if you understood this concept, let's spend a little bit of time on RFR. RFR means the rate at which government can borrow. Okay. And credit spread is the rate that I want to charge on top of the government rate. Let's spend time on RFR. What is the RFR today in India? Government of India is borrowing at what rate? 6.5, 6.7. Now, how do you see it? You just go to RBI website. This is Central Bank of India, Reserve Bank of India. You go to these rates here and see these are the different bonds issued by Reserve Bank of India. This is GS. GS stands for Government Security. 2028, which is 2028 is the maturity. So that means maturity of how many years? About 3 years. This is 2029, so maturity of 4 years. Maturity of 9 years. With me on this, they also have a 2054 bond. Maturity of how many years? 29 years. 29 ho gaya na? So roughly about 29 years, right? So fairly long dated bonds. What is the coupon that the government is giving you on these bonds? The first bond has a coupon of 7.06. But is it going to be same as YTM? No. The YTM is 6.045. With me? YTM here is 6.088. Coupon is how much? 6.75. Is the coupon YTM different? So when I take RFR, should I take the coupon or should I take the YTM of the government bond? I take the YTM. Okay. So I'm just going to keep it simple. I'm going to say in India right now, RFR is approximately 6. Thoda upar niche. Okay. Now, this part you would enjoy. Keep your questions on hold. Let me finish my story and I'll answer your questions. It's a fun topic. I want you to ask questions, but let me just finish. Kya time hua abhi? 6:15 na? Okay. So I'll do this for another 20-30 minutes. Then you ask me whatever you want to ask. Don't worry about what this means. Just know that right now I'm showing you YTM of government bond for US. Okay? US government. Why? Because data is available for a long period of time. So if I go back to 1990, कितने साल पहले? 35 years ago. And I want to see if someone had purchased bond then, okay, what kind of rate they would have earned. So let's go to 1990. I hope they have the data. Okay, they do. If you had purchased a bond in the month of January on 2nd, no, we'll look at 10-year rate. Okay. Now for different maturity, the interest rates are different. Again, that's something we want to discuss as we progress, but not today. Today we just look at one, which is 10-year. If I were to buy a government of India bond, government of US bond, I would have roughly earned about 8%. Is it 8% for all the 10 years? 8% per annum. मतलब हर साल कितना मिलता? 8%. Okay. So it's a 10-year bond. So imagine US government, you're living in 1990. US government came to you. They printed an advertisement in the newspaper. They said, hey, we are selling bonds. We will offer you 8% coupon. It's a 10-year bond. This is 1990. You can collect your money in year 2000. We will give you 8%. Chahiye kya? You said, sure, I'll take the bond. Okay. So you went to the government office. You literally signed an agreement with them. Now, that 8%, I hope you're listening to me, is fixed. That 8% is inside the agreement. Agle 10 saal wo nahi change hone wala. Next 10 years, you would keep on receiving how much? 8%. Okay. Now, what happened is, because of market dynamics, next year, interest rate remained same. Okay. Next year, interest rate reduced. Now, in a couple of years, now the interest rate roughly became about 6.5 in this range. But you purchased bonds 2 years ago. What is the coupon you're getting? 8%. But now what's the YTM? 6.78. That means about 7%. So coupon तो आपका lock in हो गया. आपको हर साल 10, 10, 10, 10, 10 मिलेगा. Coupon is locked in. Every year you get 10. But now YTM became 7. Is coupon more or less? Is coupon is more. So now your bond has become a premium bond or a discount bond? Premium. So at the time of purchase, it was a par bond. Coupon was same, YTM was same. But coupon remains same the whole time. But YTM keeps on changing based on demand and supply in the market. YTM became 7. So that bond that you initially purchased was for $1,000, but now maybe it's $1,100. With me on this? So government interest rate keep on changing. That's one reason why coupon and YTM does not have to be same all the time. They are same at the time of issuance of the bond. But after that, coupon remains same, but YTM keeps on changing. Okay. Let's go fast forward a few years. Let's go to maybe 95. Let's see what's happening. 1995, unfortunately for you, the rate went up again to 8%. Now the bond which was doing good last year, now it's a 10-year bond, remember? So now roughly 5 years have passed. Now the YTM has become how much? 8%. So your bond price graph would be, bought it at 1,000, went up for a bit, maybe went to $1,100, but unfortunately now it's come back to how much? $1,000. Okay. And then let's go a little bit in the future, let's say 1997. Now again 7%. So maybe the bond price will go again. And let me show you very interesting turning points when you want to study interest rates. This is a good website, by the way. Spend some time on it. Come to 2008. Because 2008, something very interesting happened, which is the subprime crisis. By the way, towards the end of the session, remind me to recommend you 2 movies as a part of your syllabus. I want you to watch 2 movies. They'll come in very handy when you do certain syllabus. Now in 2008, the important date was, which date? September. 17th or 18th of September. उस दिन क्या हो गया था? That day government decided that, you know what, enough is enough. These banks are being stupid. They're doing whatever they want to do. If they're going to die, हम लोग support नहीं करेंगे. It's like, think of bank as some naughty kids in the US who are on the terrace trying to do some stunts, and think of US government as a parent. Every time the kid is trying to jump, the government was holding them, but they got annoyed with it. So this time one particular kid was trying to jump. US government was like, marne do. This is exactly what happened, right? And that kid was Lehman Brothers. And when Lehman Brothers died, suddenly everyone got scared. Then after that, US government was like, no, we have to protect everyone. They created a safety net on the terrace. That was called quantitative easing, to protect everyone from falling. So that story you learn in that movie, I'll tell you towards the end. But let's go to the month of September. Really cool. I'm going to the 9th month and see how much anyways the rates have come down, because a decade ago, the rates, remember 10-year rates were about 7 or 8. But after a decade, now we've entered September, and look at this. नहीं अभी और नीचे ना नहीं आ गया है सितंबर में हम लोग. Look at this. The rates have come down to about 3.5. But if you look at short-term rates, look at this number. It's crazy. I mean, there is a day when the rate was 0.07 for a month. In fact, एक दिन almost zero चला गया था. I don't know which day was that. I think this is even lower, no? 0.05, right? Just 5 bips. मतलब 100 रुपए पे 5 पैसा एक साल का interest. In India, you get 100 rupees. If you deposit, you get 7 rupees. There, if you deposited 100, you'd get 0.05, 5 paisa. That's how low the interest rates were. 0.01. 0.01 again. Very interesting, no? Free. If you deposit 100, after a year, you get only 100. Nothing more, right? And is this the only time it happened? No. Then in 2020, now which month should I look for? March. You know? Is March, we understood that this thing doesn't look like a joke, it's serious. And all those pictures started coming on television, you know, it was scary, you know. And I think all of us lived that experience. I think around 17th, 20th March, look at 25th March, again zero. When interest rates are becoming zero, it's nothing but government going on the terrace and creating that safety net for people not to fall. Okay, how does that work? We'll learn slowly. That's actually called quantitative easing. It's not happening automatically, it's government is doing that. So government intervenes in the interest rates quite a bit. They have a big influence, okay? So one reason why YTM changes is because we know RFR changes because of variety of different reasons. But YTM can also change because of credit spreads. Now, why credit spread? So imagine today a good borrower came to me, I gave him loan. That time I charge 0 credit spread. But tomorrow, let's say Warren Buffett decided that, hey, I'll visit India. So he came to India on a trip and he met some of you, and he also started liking option trading. Just making up, okay? And let's say that Warren Buffett becomes Indian option trader, and you know what happens to Indian option traders. What happens? They lose money. You know? पूरा घर बीर बेच के सब बेच के option traders, 95% of the option traders in India lose money, right? So imagine Warren Buffett went bankrupt. Let's hope that never happens. He's 95-year-old now. Right? So let's hope the final few years, and I hope those few years are many, he has a good life. But let's say he becomes bankrupt or he loses all his net worth. Now suddenly he's become riskier. So if he were to go to the bank, today, क्या bank ज़्यादा credit spread लगाता? Yes. So credit spread is also not a fixed number; it keeps on changing, right? And the idea is very simple: that RFR changes, credit spread changes over a period of time, but coupon does not change. And that is the reason why the coupon and YTM does not have to be same all the time. In fact, in coupon and YTM is generally same at the time of issuance of the bond, but because the coupon is determined based on this equation at issuance. But coupon is set, it's locked in, it's in the agreement, but YTM will keep on changing for two reasons. Either RFR will change or bolo, or credit risk will change, and therefore the YTM will keep on changing. If the YTM goes up, then the bond price goes down. If the YTM goes down, then the bond price goes up. There is an inverse relationship between the bond price and the YTM. So you want to make money on the bond market because all of us love equities, no? Share market, we love derivatives. Can you make money on the bond markets? Yes, you can. There are two ways in which you make money on a bond market. Either you decide that, you know what, I'm going to focus only on what will happen to the government rates. If you want to focus only here, you're more of an economics type of a person. You're an economist. In the finance world, the fund managers which focus only on this part, these are called top-down guys. So you talk to a fund manager who says, hey, my style of investing is top-down. So top-down means he doesn't look at companies, he doesn't bother about that. He just looks at what the government will do, what would be the demand and supply, will the interest rates go up, will the interest rates go down. But alternatively, you might find some guys who'd say, you know what, I can't predict what the government will do. It's very difficult to predict what will happen to economy, but I can predict what will happen to a company. It looks like this company is doing good, credit spread. Company is going to do good in the future, they'll make good profit, credit spread will reduce. The company is going to deteriorate, they're going to do very bad, credit spread will increase. Let me focus on the company, not on the economy. Then some guys are. So एक मेरा आपसे humble request, huh? And I see a lot of fund managers even on television doing this mistake. Please, this is not called bottoms up. Bottoms up is something else. This is called a bottom up approach. Okay, so don't make a fool out of yourself. Don't call this bottoms up. A bottom up approach or a top down approach. Okay. Now, how to make money on the bond markets. So I'll tell you some of the thought process that I have been deploying for myself and some of the clients that I've advised in the past. Kariban, this was in 20. I'm always invested in equities. I don't do bonds. Very rarely I will do bonds. But I think one trade I did in 2021 or 22, I don't remember. But I remember I did this on 30th of March. Okay, because of course there was some tax benefit that was available, which government was going to close in the next financial year. So those were the last two trades to execute that trade. Okay, in Indian market, some tax thing. So what I did is I basically bought 50-year Government of India bonds. 50 साल तक coupon देगा. Now that time, this 50-year Government of India bonds were giving a coupon of approximately 7.5 or something in that ballpark. Okay, my thinking was very simple. At that point, it looked like right now the interest rates are at the peak. Interest rate बहुत ज़्यादा है. But over a period of next 3-4 years, when the inflation, remember we had a lot of inflation, right? Because of that Russia-Ukraine war, and also because of the supply chain disruption after COVID, China, वो सब हो रहा था ना, सब चीजें महंगी हो गई थी, गाड़ियाँ महंगी हो रही थी, everything was expensive, right? So my thinking was that hopefully someday these rates will come down. Okay, so current YTM is 7.5. Sorry, current YTM is 7.5, and current coupon is also 7.5. Correct. Now my expectation is that someday the YTM will come down to 6%. Right now, maybe a long dated YTM in India, we just saw on RBI website, long run YTM in India, where is it? Is about, let's say 6.75, right? So My expectation is that hopefully over a period of time, this will come down to 6. So this will be the YTM, but this will be the coupon. So coupon of 7.5, YTM is 6. Is the bond trading at a premium or discount? Premium. So you buy a bond for 1,000 rupees. Now look at the beauty of bond market. Safe because Government of India bonds, right? So paisa mera kahin nahi ja raha hai. Of course, I'm not making crazy amount of money, but every year I'm collecting 7.5 from the government, which is fine. Now over a period of 3, 4, 5 years, if I bought a bond for 1,000 and if the interest rate becomes 6, maybe my bond price will become maybe, let's say 1,200 or 1,100. And then a 1,000 rupee bond I can sell for 1,200 rupees. So I can profit from both the sides. I can collect the coupon for 2, 3 years, safe investment, plus I can benefit from capital appreciation. So you can actually make equity like return on bond markets also. Okay, and this is in fact a government bond. In the US, there is a very interesting market which is called, and this is where one of my investing gurus, he practices in this area. His name is Howard Marks. I've never met him, but I've read all his literature. What this guy runs, he runs a firm called Oak Tree Capital. And his specialty is he invests into something called as a high yield bonds. Okay. Now you can, if you get time, you can go and watch this gentleman on YouTube. But what is a high yield bond? Bonds issued by those companies which are very, very risky. The companies which looks like might default, he generally goes and buys on these bonds. Now you would say if they might default, why are you buying them? Because remember what is the equation of YTM? YTM of a risky company is equal to RFR plus credit spread. Now how is credit spread determined? Depending on the level of riskiness. So this number could be very high. Okay, now in the US, RFR right now is about 3 or 4. But some of these companies might have a credit spread of let's say 10%. So you're collecting a YTM or how much? 13. And then obviously he bets and he hopes that these companies will recover. That means these companies will do good. And when the companies will do good, RFR might not change, but maybe this 10 will become 2. So the YTM will become how much? 5. But your coupon will be how much? 13. Because at the time of purchase, credit spread was higher, but YTM will become 5 and you can make crazy amount of money on these category of investments. In fact, some of these categories are more lucrative than small cap investing. That is called high yield bond investing. Okay, so that's the general thought process on YTM. And now I'm done talking. We have about 20 minutes left. I'll be happy to take your questions. We'll do it in a structured way. I will first do a couple of questions from Pune. They'll come to Bangalore and then I will go online on Zoom. Anything you have on today's class, feel free to ask. Anything on bond valuation, YTM, RFR. Maybe we can also squeeze in if you have some questions on study strategies we can use this time. 20 minutes है हमारे पास. Let's make the most of this time. If anyone online would like to speak, you just need to raise your hands. Okay, we can start with Sri Hari first. Mahesh, you can go second.
Sir, the strategy which you were talking about of Howard,
Howard Marks.
Howard Marks. So instead of buying bonds of that company, why doesn't he just buy the stocks of that company? Maybe if the company recovers, he could end up making huge profit in that as well.
Okay, that's a great question. I'll repeat his question. Who asked this question? Sri Hari, right?
Yes, sir.
Okay, fantastic question, Sri Hari. Sri Hari said, fine, if I think company is going to recover, then just buy the stocks because the stock price will also go up, no? So why buy bonds? So the answer is also interesting. This requires slightly technical understanding of the balance sheet structuring. Okay. So on your balance sheet, you have equity, which is the shares, and you also have debt. Imagine something happens. ध्यान से सुनना, बहुत मजेदार है. So आप आपका नाम क्या है? Heath. Okay, so Heath and Utkarsh, two investors into a company. आपके कंपनी में, आपका कंपनी का नाम? आपका नाम? Jay. So both of us put money into Jay's company. Heath is equity investor. I'm a bond investor. Both of us give 100 each. Okay. Now we feel that Jaydeep is currently high risk, but we are hoping that his business will improve. Now, for some reason, my thesis went wrong and Jaydeep went bankrupt. Now he's required to sell all his assets, okay, and then pay back the capital providers of the company. Who do you think he will pay back first? He will pay equity or bondholders? Bondholders. So the beauty of buying bonds is, if things go well, your return is as good as equity. At times even more, right? There's some maths involved there. But if things go south, you still have some protection, because on balance sheet, the bondholders are always paid first, equity shareholders are paid second. So in finance, we always think, Srihari, in the context of risk and reward, right? So what you want is, you want to enhance your returns, but you also want to minimize your risk. That's the whole game there. Does that answer the query, sir?
Yes, sir. Got it.
Okay. Now, one more tip for you, if you want to learn more about this. Howard Mark publishes something called as Howard Mark memos. They are not published at fixed interval, but typically once in every quarter, once in every 6 months, you get one memo. These memos are available free of cost on his website. It's a fantastic resource to learn, not only about bonds, but in general about overall investments. Okay, and this is coming from someone who's done that for 25, 30 years. So all that you need to do is, if you have the motivation, just go and search for Howard Mark memos. And this is the most recent one, and probably a really beautiful one, which is called Nobody Knows. And the same one he had published once, I think in 2008. And now he's published it again. And if you want to read, you can just read through that or download a PDF and make a book out of it. Okay, and of course, if you don't understand anything, that's fine. I mean, for the timing, you can read once, make notes of whatever you didn't understand.
Hello?
As the course progresses, slowly, these things will start making sense to you. Sorry, I'll just list down the two movies before I forget. Sorry, can I just make the list and then you can ask the question, please? All right, number one, the movie that you start with, which is a very beginner friendly finance movie. It's called The Big Short. Okay, you would love the movie. It's extremely entertaining. It will not feel like they're forcing you to learn something. But the beauty of this, after this movie, a lot of concepts in this fixed income syllabus will look easy. For example, in the third class, that means the third weekend from now, we will have to learn some very complicated concept called CDO squared. Okay, now, of course, I'll explain all the technical details, maths, we'll enjoy the whole process. But in that movie, they've explained CDO square in a scene in Vegas Casino. Vegas Casino mein ho jata hai, and there's a conference of the CDO managers. So they sit across a table, and then
Hello.
the CDO manager is trying to explain how CDO square as a concept works. It's a lot of fun. So
Hello.
if you get,
Hello.
yes, hello Bangalore, just hold your guns for a bit, please. Second movie, this is a little documentary style, but again a beautiful one. It's called Inside Job. How many of you have seen this? ये शायद YouTube में है. In this movie, you would see. Have you heard of Raghuram Rajan, the previous RBI governor? You would see him. He was at that point. He was the economist at IMF. This is also very interesting. Both of these movies talk about what happened in 2008. And if you feel like you want to go on a binge spree, the third one is not Billions. Is a movie on derivatives actually. It's called Nick Leeson. This you might find on YouTube. This was made in 2000s. Of course, it's a little old movie, but very interesting. The life of a rogue trader. Okay, so go nuts. Watch this after you've seen FinTree LMS videos. Okay, Bangalore. Hello, hello. Go now.
I'm audible now?
Yes, absolutely.
Okay. Thank you so much. So this is my first class. Thank you so much for the wonderful session. So my query is on practical side. The bond market in US is strong, and India, uh, even if I buy bonds, right? If I have to sell them, there should be a platform which is used by many of the users, so that you will get buyers for it. If I want to sell, the volume has to be high, right? So practically, which site? I mean, I don't want any recommendation, but I'm asking what are the sites for example, Equity Zerodha, Grow or other broking for bonds? Which are the sites we can use? Not only for governments we can use RBI, but for private bonds also, which is the site? And just one thing is. Like in equity, we have only BSE, NSE, where all stocks are listed. But if I go to different bond market sites, right, all bonds are not listed. Like specific bonds are only in that site. So just your general take on this for a practical thing in India.
Sure. Great question, sir. What's your name?
Bakya Nathan. Bakya. I know it's difficult.
Did you say Maki Nathan?
No. Bakya. Bagya.
Baki.
Bagya.
Bakya. Okay. All right. Bakya. See, it's Vakya, is it? Okay. All right. So Vakya, see, one is what you should know is generally bond as a market is not oriented towards retail participants, neither in India nor in the US, even in the US. And why is that? It's simple. Because bond market में जो जितने भी बड़े players हैं ना, a lot of big players in bond market, especially in the corporate bond markets, these are actually buy and hold guys. Okay, so I'll tell you what the difference is. Imagine a few years down the line, we decide that FinTree का IPO करेंगे. Okay, so we issue shares of FinTree. Some of you guys buy, and then let's say the share price is 100, then it becomes 110. Some of you would want to sell, some of you would want to buy. So it will be a liquid market, right? You go on an exchange, buy, sell will happen. Now, again, few years down the line, I decided that, hey, I don't want to do IPO. I just want to issue bonds. So I'll come to some of you, I'll say, listen, I'm selling bonds. This is the coupon we'll offer based on the credit risk. Are you willing to buy? Now, many times people who will buy will be a buy and hold investor. Buy and hold means खरीद के जेब में डाल लेंगे. Then they will keep the bond for 10 years. So then it's not easy to sell and buy and sell bonds that easily. This is referred to as a liquidity problem. So therefore, bonds generally trade on a different exchange compared to a regular exchange. These are called OTCs. OTC stands for over the counter. Okay. Now, the same story is true for US. Same story is true for India. India is, if US bond market is 100, Indian bond market is actually 0.1. इतना हमारा छोटू baby market है. Because in India, if someone wants to take a loan, what do they think first? Bank. है ना? And that's true for all the छोटू as in not population wise. Population wise कोई हमसे compete करके दिखाए. But when I say छोटू countries, I mean developing countries. In developing countries, generally the reliance is more on bank to borrow. That's not true in the US. In the US, if FinTree was there, I would never go to a bank. I'll first go to bond market. Are you getting the difference? In developed market, borrowing happens through bond markets. In developing world, reliance is more on the banking market. But does it mean it will remain the same in India forever? No, it's changing. But does it mean that I have no avenues available in India? That's also not true. There are avenues available. If you want to do a buy and hold type of investing, then some of the excellent platforms which have come is, one is your Vint Wealth. Sometime back, I did an interview with the promoter of Mint Wealth. It's on FinTree's YouTube channel. You can see it. It's just a month old, I guess. We have Bonds India. We have 5, 6 plat, Zerodha, Grow. All of these guys are selling bonds. Luckily for you, now the denominations have also been cut down. पहले ऐसे होता था इंडिया में that if you had to buy a bond, the minimum ticket size was 10 lakh rupees. So you have to buy at least of 10 lakh. Now the ticket size for many of these bonds have come down to 10,000 rupees. But can you buy and simply flip them or sell them? No. But then how can you do it if you want to apply some of these concepts in practice? You can do ETFs. ETF stands for Exchange Traded Fund. So when I told you I did a 30-year Government of India product, 30 year शायद मैंने लंबा किया था, 50 मेरे को याद नहीं, 50 साल था शायद. So how did I execute that, and why do I think I'll be able to sell whenever I want to sell? Because I executed that trade through a SBI bond ETF. So there are these ETFs available. These are liquid. These you can buy and sell whenever you want. But most of these ETFs are available on government bonds, not on the private or corporate bonds. So which means you cannot earn credit spread. You just get to earn the RFR. But you can still bet on the fact that RFR girega. So you can still make a little bit of money on that front. Vakya sir, did I answer the query?
Yeah, you did.
Okay.
Thanks. Thank you.
Sure. Mahesh, would you like to go now?
Yeah, hi, Utkarsh. The question is regarding the bond valuation we did earlier. Okay, so if the coupon is on a higher side than the YTM, with that logic, we kind of agreed to pay more and pay premium for that bond. So by doing that, aren't we leaving the high coupon advantage because our effective earning would be same as the YTM?
Yes, you're right. Right and wrong both, Mahesh. That's agenda for tomorrow. Maybe let me discuss about that tomorrow. But yes, see, if I bought the bond when the coupon was 10% and YTM was 10, there's no benefit. I'm earning 10, right? But imagine in a couple of years, YTM became 8. But at the time of purchase, I got a coupon of 10. So I will be able to earn much more than the original YTM. All that maths we'll learn in tomorrow's session.
Okay.
This query mathematically will be answered in tomorrow.
Okay, perfect. Thanks.
All right, time for 2 more questions. Ridanshu and Hriday.
Good afternoon. Good evening, sir. Am I audible?
Yes, absolutely. We can hear you.
Sir, in a case like if YTM is negative, when in 2008 when US banks got bankrupt, investment banks. So if YTM is negative, then also for fixed income bonds we will get paid.
Yes. Again, very interesting topic. I wish we could spend more time. Do you think interest rates can be negative? Yes. Will you make a fixed deposit in a bank if bank told you हम आपको -2% देंगे, which basically means you deposit 100 today, come back after a year and take 98? Will you? You will. Because that's what the world thought, that negative interest rates will not work. And then Scandinavia, which is Sweden, Norway, Denmark, Japan, proved the world wrong. So interest rates can go negative. And good news is the mathematics works the same way. So the answer is yes, the same maths. Ridanshu, do you want to go now?
Yes, sir. I have cleared my doubt. Thank you.
Okay, Hriday.
Hi, good evening, sir. I had the same doubt in the same range, like if YTM can be negative, and if it is negative, how does things work out?
Mathematics is still the same. Actually, you can try it on the TVM Row. We'll do it tomorrow. We'll keep YTM negative. YTM negative means a coupon of 0 will also become a premium bond, because coupon will still be higher than the YTM. So mathematically it turns out to be same. Okay, we have Bhavesh and Sachin. Let's take their queries and let's wrap up the session. Sachin, would you like to go?
Yes, sir. I am audible, sir.
थोड़ा louder would be better, Sachin.
Sir, I am audible.
Yes.
Sir, my question is regarding about study strategy. Sir, I want to ask you, 2 महीने बचे अभी एग्जाम के लिए, तो जो आपने बताया हुआ है LPR सिस्टम, तो उसमें से कुछ वीकली टेस्ट में जो टॉपिक कवर करने के रहते हैं, टारगेट रहते हैं, उसमें का कुछ टॉपिक बच जाते हैं। तो वो जो बचा हुआ सिलेबस है अभी वो लास्ट के 2 मंथ में से 1 मंथ में कवर करना है, तो वो टाइम पे करिकुलम पढ़ना वर्थ इट है या सिर्फ वीडियो और जूस नोट्स
वीडियोस और जूस नोट्स
करिकुलम स्किप कर देना चाहिए क्या सर?
आपके पास टाइम नहीं है सर।
और सर एथिक्स के रिगार्डिंग एक क्वेश्चन था।
हाँ जी सर।
एथिक्स का आपका जो वीडियो था वो 2 बार हो चुका है और जूस नोट्स 1 बार हो चुका है, करिकुलम भी हो गया, तो उसके बाद आपके जो वीडियो वगैरह वो देखना ज्यादा प्रिफरेबल रहेगा या फिर
क्वेश्चंस प्रैक्टिस कीजिए सर।
एथिक्स के बारे में क्या सर?
हाँ जी, क्वेश्चंस प्रैक्टिस कीजिए आप।
ओके सर, थैंक यू।
Oh, by the way, regarding curriculum, I forgot. Could you ask for fixed income, derivatives, quant? It's okay if you decide not to read CFA curriculum. Okay, now these कितना खुशी हुआ है कुछ लोगों यहाँ पे. This fixed income juice notes, I prepared myself. I was on a holiday some time back. And I was getting bored, so I decided कि मैं खुद ही बनाता हूँ. So I put in good 10 odd days, morning to night. But every single line that's important in the CFA curriculum, everything is carefully crafted in the juice notes. It went through multiple iterations. Every blue box in the CFA curriculum has a representative black box in the FinTree juice notes. Okay, you've seen those black boxes we have. So if you want to just experiment, open CFA curriculum, open juice notes, you will understand what we've done. We've just taken the curriculum, extracted the juice out of it, put that on the juice notes. So my videos, juice notes and weekly test will do the job. So we're giving you more work on videos on this subject, but that means I'm trying to save you time by skipping the CFA curriculum. It will still work. Is it okay? All right, I'm done. Thank you very much. Sorry, I could not answer all the questions, but I'll try to take some of them tomorrow's session.